inflation forecast, but the repo rate remains unchanged and the stance also continues to be neutral. Let's also get some more reactions on the latest monetary policy outcome.
Even though growth needs to be supported, credit growth is not yet fully and the robust term that we would be expecting, but still they wanted to be cautious because inflation will be trudging up in the fourth quarter and the first quarter of next fiscal. That's why the cautionary note. That's why the pause as of now. That's the right way, because that is what the neutral stance indicates. That the neutral stand indicates that the MPC's readiness to move either way.
Global uncertainties, these tariff issues are also negative for growth, but they're likely to soften our inflation more, since if you cannot export, that amount is available internally to damp prices. So overall, the prospects seem to be that we will see growth softening and inflation also softening over the next few months. And if that happens, then I think they will definitely cut the repo rate in October.
The deposit rate, fixed deposit rates, they take time for the banks, and banks have to also protect their name. So I think the numbers which RBI governor has stated about the transmission, I'm not expecting that in any significant manner that position is likely to change. The repo rate link, they get adjusted immediately. Within 2-3 days, the rates are changed. The rest of their fixed rate loan, the rate of interest will change only when there is a reset date.
And we also have my colleague Ankur Mishra, who is joining us from the RBI headquarters to give us a roundup of this time's policy meet outcome.
Yes, it's a no change policy from Reserve Bank of India this time, and the key rates have been kept unchanged, awaiting more clarity on the transmission which is happening, and also the impact of 100 basis point cut which has already happened so far. And apart from that, the projections for FY26 for GDP has been kept intact at 6.5%. But there is a key message here. Of course, it has come in line with the projections. The growth aspirations are more, and a governor has clearly mentioned in the post-policy conference that the aspirations will be there to grow more than 6.5% on GDP front. Apart from that, it's about inflation that has been under control so far. Keeping in mind what were the projections of Reserve Bank of India, but the projections for FY26 have been reduced to 3.1% compared to 3.7% earlier. And more importantly, the Q1 of next financial year, that the projections have been kept as 2.9%. So the expectation is that after Q4 of the current financial year, the inflation may start inching up to over 4%, and finally it may reach 4.9% in Q1 of the next financial year. Apart from that, Reserve Bank of India governor also mentioned about the liquidity, whereby the surplus liquidity is there in the system, and from the next month onwards, the earlier CRR cut impact will be seen. There are a few guidelines also which are likely to be released, especially on the front of liquidity framework, where IWG has given report, and also governor mentioned that the inflation targeting framework is likely to be revised, and the consultation paper will be issued soon.
Right, thanks Ankur for that comprehensive roundup of the MPC.